Hi guys, welcome back. Today we're going to be looking at Palantir Technologies and whether this company is a buy. This company started off on the stock market last year and it was listed at $10 per share. Since then, in the beginning of 2021, this stock has shot up all the way to $45 in January, and then since then has dropped down to about $19 right now. So we're going to be looking at whether this brings it into a buy zone and do the stock analysis on this company. So if you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So the first thing we're going to be looking at before we begin is what does this company do? So Palantir is a data mining company that collects and processes information. It has two main platforms, Gotham and Foundry. So Gotham is the higher end service and this is used by government agencies. So this is used by the US military so far, the CIA, the FBI and ICE. And in the near future, the government plans to make it their default operating system for transferring data across the US government. Foundry is a slightly lesser high-end deal, and this is used to more commercial customers and businesses who want to use Palantir's services. So in 2020, they generated 56% of its revenue from government and 44% from commercial customers. So it is a pretty even split, and the company isn't relying too heavily on one or the other. Their revenue rose 47% to $1.1 billion in 2020, with 77% of its growth in the government sector and 22% growth in its commercial businesses. The company also had new contracts with the FDA, the US Army, and the US Air Force, and many bigger customers entered their customers. We're looking at Rio Tinto, PG&E, and BP as well. So the total number of customers generated more than 10 million in annual revenue, which was more than 50% increase. And the average revenue per customers also reached close to 8 million, which is a 41% increase from that. Their gross margins rose from 71% to 81%, and their operating margins went from negative 45% to a positive 17%. So 2020 was an amazing year for Palantir Technologies. So the next big plus for Palantir Technologies is that it has a strong government-backed moat. So because of its data analytics and artificial intelligence software capabilities, the United States relies heavily on Palantir Technologies. Big data and AI are becoming more and more important for governments all around the world, especially with economic and defense areas, and especially as we move into the 21st century, the US government is trying to benefit of this head start with Palantir Technologies. The company is also aggressively reinvesting their cash flows into enhancing their technical capabilities, and they also want to become the most powerful AI software in the world. On top of this, they're also investing in business development in order to grow their private sector, which is where the majority of their future growth is coming from. On top of this, another plus for Palantir Technologies is that the way they run is that they have very high switching costs, which means that they have a competitive advantages to other companies. Because of this switching costs, it takes a lot of money for a company to switch from one data analysis company to another, and because of that, it's more likely that the customers will stay with the same company for an extended amount of time. So once Palantir gets a contract with an organization, it is much more likely that the organization will continue with the same company, providing a reoccurring revenue stream as well. So what is the future growth for Palantir? So currently they have an addressable market of $119 billion, and they're also growing rapidly their AI, and their growth runway continues to increase. Their Gotham brings in more revenue between a 56 and a 44% breakdown, as mentioned previously, but the majority of the growth will be coming from their commercial sector as more and more businesses enter their customer base. They should be able to achieve significant growth moving forward with the US government. In the financial year of 2020, they generated around $1 billion from this, but in the future, they're expecting more than $26 billion from the US government alone in the next 10 to 20 years. They also have a very strong, and the US government depends on them a lot, so I wouldn't be surprised if this $1 billion quickly increases to 2 to 3 to 4 to 5 billion in the near future as well. So even more future growth. So the management has reported that they have a $2.8 billion deal value at the end of 2020, which is a 104% year-over-year increase. This puts their company on a very strong trajectory to crush their 2025 $4 billion revenue target, and especially as they continue to aggressively invest into their Foundry business, They have also included a free trial, which means that companies will be more likely to be wanting to try out their services at the beginning. And then with that, because of the very high switching costs, they're more likely to continue with this, adding more and more companies to their customer base. On top of this, they're expected to grow very, very quickly from around $1 billion a year to tens of billions of dollars a year in the next 5 to 10 years, which is an amazing amount of growth, especially for a company at this size. It is also expected that many of the big tech companies right now will look like Google, Amazon, Tesla, Apple. All of these companies will eventually become competitors of Palantir or actually join their customer base as well. Their business model has been extremely highly profitable. They continue to scale their operations, so their gross margin in 2019 was 71%, and this increased by 1,000 basis points to 81% in 2020. On top of this, their contribution margin increased from 21% to 54% throughout 2020, and by 2021 they are expected to have a gross margin of 85%, which is amazing. So the last thing we'll be looking at today is their technical analysis. We can see the company started off at $10 about October last year, went all the way to $45, but then crashed quickly back down to $19 as of right now. If we're looking at the recent trends, we can see that the stock price is still on an uptrend, especially if we look at the last year or so. And if you do believe in future growth, and the growth that I mentioned in this video, $19 is not too bad of an entry price, especially if you're looking at the past 6 months or so. So just some final words. The stock price based on fundamentals is still slightly expensive. It's not profitable yet, and their price to sales is still quite high. However, they do have amazing future growth, but their financials are not so good. But the growth that they do, the current stock price is a pretty good deal to get it at, $19. Especially with this company expected to become having tens of billions of dollars in revenue over the next 10 to 20 years. So if you do choose to invest, make sure to do your own due diligence, and thanks for watching. Bye.